John LaForge, it's been exactly 1 year since we last spoke. Thank you so much for joining us.
Sure, this is great.
So I should say what a difference a year makes, or maybe not, depending if we're talking oil or gold. Let's look at the commodity space here and what you're forecasting for 2019.
It's almost not even year to year now. Now it seems to be the last 2 months. Everything has changed. So we came into this year thinking oil was going to be around 50. That's pretty
Good
much
call.
We will take that
Right.
call, but middle of the summer, we were sweating it a little bit. We didn't understand 70 or 80. Supply demand wasn't there.
So the difference is you have turned bullish on the commodity space. And when I heard you say that, I said, hold on, wait a second, what is happening? But not necessarily the metals.
No, metals are the one real positive we like, above and beyond everything else. So particularly silver, particularly platinum.
Okay.
Yeah, so we like commodities, but we especially like the metals.
But how about gold?
That's the one that's probably going to lag a little bit, yeah. And mainly because if you, like we look at the last couple of days, we have all this anxiety. We have all this fear that's out in the market with trade with China and the US, OPEC, you name it. And gold is getting a bid, but it's not getting the bid that you really think that it would. I think a lot of that has to do with gold's pretty expensive versus the other metals. So anyone that wants to give it a bid, they kind of have to look at the other metals first.
So last year you could see gold retest 1050.
Yeah.
We didn't get that low this
Yeah.
year. Do you have any forecasts for 2019 price?
Yeah, it's a little bit higher from here. So it's roughly in that 1250 to 1350 range. So target being 1300.
You spoke of bear super cycles and how gold had, last year was in that 5 years left. So do you still feel there's 4 years left to this, or?
Yeah, unfortunately there still is. So for anyone that follows commodities, it's one of these issues where during bear super cycles, it's all about supply. On the margin, we rise in price just enough, and all of a sudden we find all this supply that's out there. Oil is the best example because that's precisely what happened this year. We had this dynamic where oil prices kept rising, 60, 70, 80, but if you kind of peel the layers back and look at supply, there was way too much supply coming on globally, not just the US. Globally, we started to see excess supply. The same thing happens pretty much across the board with commodities. Oil was the poster child this year, but gold still has too much supply. We are producing more gold today than we were at 1900, 6-7 years ago.
That's one of the longest standing debates, because I know other people would argue, no, we're in a gold shortage, but you're not seeing that from your research.
No, not only are we not seeing from a total perspective, but if you divide all the gold that's ever been mined in the world and you divide it by the total population of the world, we're hitting one of the highest record numbers we've ever seen. So it basically amounts to everyone in the world can now have 0.8 ounces of gold. And that's a very, very high number historically. So on a per person basis in the world, we're pretty saturated with gold, even though the total figure doesn't look that large.
I attended the Wells Fargo luncheon yesterday, a wealth of information there. And of course, the topic of risk come up. And obviously there's no shortage of risks, at least forecasting coming into 2019. So why doesn't that help the gold case?
I think that's the problem. I think supply is the issue. I think when you really peel it back, these types of dynamics can help in the short term. So risk, any type of flight to safety can help give gold a bid in the short term. But as soon as that's gone, they go back to the supply-demand dynamics.
I'm going to ask you a loaded question now then.
Sure.
What would it take, or paint a picture of what it would take for gold to get back to those highs of 1900?
Oh gosh, some of that stuff, well, actually, in the shorter term, I can't even see that happening no matter what crisis happens. So, forget about speculating on a crisis itself, where we could get to 1350 or 1400 in gold. I don't think that would bring it to 1900. What's going to bring us back to 1900 and above is that bear super cycle has to run its course.
But what about that other missing factor, quantitative easing? Because when it rallied, helicopter money was happening. So is that a big part of the equation?
No, not longer term, not in the bear super cycle. I think it was just the next excuse during the bull super cycle years from 2001 to 2011, when gold went from 250 to 1900. We just had a shortage of supply, which started the whole rally. And then towards the end, towards 2011, you had all this QE, which really added some fuel too. But it was just one of the extra excuses to say, hey, bull, we should go up. It's not necessarily a major issue longer term. It's just a shorter term excuse.
Focusing back on oil here, you're bullish oil for 2019.
Big surprise.
Why do you think it's going to turn around?
One, it's too cheap. So what you have now, what we have found with commodity prices is where we get targets from comes from the marginal producer. So whoever's producing the extra marginal barrel of oil, they're setting the price. Who is that marginal producer today? It's the US. We keep producing too much. So what we want to focus on is cost. What is the break-even cost for US producers? It's about $45 on average if you go to these different shale basins. Pretty much across the board, it's somewhere between 40 and 50. Companies are a little bit different, but you take it in aggregate. So once we get below 50, we're going to start seeing production shut in. I think that's why we're going to see higher price, that eventually we're going to start shutting it in. You're probably going to get the next few days, OPEC plus Russia, at least jawboning things up. We may not get the 1.5 million barrel cut we want, maybe it's just 1 million, but let's say it's only 1 million and we sink by $3 or $4, they're probably going to start jawboning it back up quickly.
You mentioned silver could be the breakout star in the metals complex. I think that would bring a lot of relief to silver investors out there who have just had a horrible year.
Yeah. Horrible 6-7 years.
So do you think it's because we'll see some silver miners have to scale back, shut down some mines because of price levels? What would cause a spike in silver here?
That's precisely what we're seeing. So we go back to those super cycles, those bear super cycles. It's all about supply and supply growth. Gold, we haven't really seen the supply growth slow. Silver we have. We've seen a dramatic slowdown because it's not worth it at this point. Even though silver is often a byproduct of other metals, they're really focusing on the other metals right now, and that's a good thing. So you take the growth rate and supply down to a certain level, like where we are now, we're probably going to find a bottom in here pretty soon.
You mentioned platinum, but look at palladium.
It's crazy.
What is happening?
I know. And it's funny, it's the same two producers. So it's Russia and South Africa that produce both of those metals, platinum and palladium for the most part. And usually what used to happen was we'd go back and forth depending on which car manufacturer was using them for catalytic converters of what the prices were. That's not happening at all. It's all palladium all the time. I think it's gone too far. And, yeah, and I think it's time to switch back to platinum.
All right. Well, John, thank you so much for joining us for this
Thanks,
outlook.
Daniela.
Always a wealth of information. I always appreciate when you come. Thank you so much.
Thank you.